so now we're a few months into the administration, and instead of policy becoming more certain, we actually have a greater sense of uncertainty broadly, and it's having a big impact on asset prices and markets. And so the trade policy and the discussions about trade policy certainly have changed the level of uncertainty in markets. Markets are looking to reprice the value of things based on the uncertainty they have around what these policies will ultimately look like and how they will ultimately be implemented. And that is therefore causing shifts in fund flows on a very significant basis. And I think one of the things that's different about what we're seeing right now is normally when asset prices, when equities reprice, it's not surprising when you go into a more uncertain environment that equities reprice. But generally when they do, people buy U.S. Treasuries. But here we're seeing different behavior because at the margin, people that have been very, very inclined towards U.S. dollar assets are slightly shifting their preferences. And I'd say it's still at the margin, but as people are selling equities, that puts downward pressure on the dollar, given these are all U.S. equities. You've got investors around the world buying U.S. equities. And as they de-risk to some degree, that's putting pressure on the dollar, and that obviously has an impact on Treasuries. So the level of uncertainty is high. I think it's good that there's been a delay, let's say, in the implementation of these reciprocal tariffs, but we still don't know what these deals are going to look like, where it's going to land, and what the ultimate impact on business will be. And so what's happening is business is pulling back. People are pulling back because they want to wait and see. They want a higher level of certainty before they make decisions and they move forward.